Markets off morning highs, mid-caps fall in line. PSU banks, realty and metals gain, while FMCG and consumer durables trade weak.
The Indian Army floats a 30,000 crore rupees tender for the Anant Shastra surface-to-air missile. BEL, being the integrator of the missile system, could see unexpected win, pushing its order book to over 100,000 crore rupees.
The United Kingdom has backed Tata Motors Jaguar Land Rover with a £1.5 billion loan guarantee to support its supply chain that's running thin on cash. The government backing will project jobs of thousands and protect those jobs and align with Britain's focus on industry to boost growth and exports.
Ministry of Petroleum and Natural Gas flags low valuation of enterprises under its wing. It promises performance-linked pay for top execs, rules out levies like windfall tax, promises price stability and value unlocking via divestment. Basically, all things that the market likes. And these stocks are higher today. Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Mangalam Malu, with me Vinny Motiwala. If you look at the markets, absolutely flat for the frontline index, but the first half, so much happened, right? After 6 days of consistent decline for our markets.
Well, at least the bulls did.
The bulls missed me, but now that I'm back, the market's flat again. So I don't know whether the bulls missed me or the bears missed me. But be that as it may, the interesting part is that we opened higher today, and that's what was on the cards, given the sort of drubbing that we had seen for 6 days. And now the highs have actually been sold into once again. As we move into this fairly eventful week, we have the monthly expiry tomorrow. We have the RBI monetary policy outcome as well. We also have a holiday this week, and the streets celebrating the Shera. We'll also find out for, what will be the outcome of any sort of trade agreements that will happen between the US and India as well. So event-heavy week. Market's been seeing a lot of selling already, and now highs are being sold into. So a lot to happen.
Absolutely, a lot to happen. And Mangalam, since you were mentioning about tariffs as well, those most favored nations, there's going to be some discussion in terms of tariff on that point as well. So that will be key to watch out for, especially in terms of pharma companies as well. What finally comes out for these nations is a key to watch out for. But other than that, in terms of sector performances today, look at the PSU bank. That's managing to hold on to gains of almost 1%. So that'll be something we'll be keeping an eye out on. The real estate pack also managing to hold on to gains, while the flip side, obviously, of media, that's down and out. Auto is not managing to hold on to gains as well. So that's what we're looking at in terms of the markets, and clearly at least some bit of a better performance is coming from the broader end of the market, though that has also fallen off and come off the day's highest point, but it is still holding on to gains of almost 1/10 to 2/10%. Again, it's come off. So that is something that we'll be keeping an eye out on. But that's how the market is looking like, very flat right now, muted as of now this afternoon. Mangal.
All right. You're talking about a lot of these pharmaceutical names. You're looking at Lupin and Wockhardt. What exactly is special here?
Absolutely. So, Mangalam, what we're watching out for today, especially for Lupin and Wockhardt, let me start with Lupin first. Now, Lupin, obviously, there was an announcement that came in where the company is wholly owned subsidiary in Netherlands. They entered into a definitive agreement with Visu Pharma. That is an ophthalmology company in the European region. Now, they have a lot of these countries which they cover or sell their products in Europe. UK is also one of them which is included in terms of the sales that come in. So, for what does it mean for Lupin? One is just a 190 million euro purchase or acquisition that they are looking at. This is around 12 to 13 times the EBITDA. Analysts are saying this is a very positive one coming in for them because they can further expand their reach in the European regions. And other than that, in terms of overall the revenue, which you look at for Visu Pharma, for 2025, the expected revenue is at around 54 million. 2024 was 48.1 million. So they're expected to grow in that 10% CAGR range as well. And that's what they've been growing around in the last 10 years. So good acquisition, expected to improve their growth as well as the margin profile. Now, in terms of Wockhardt, obviously the reason is mainly because we had those clarifications that came in from US that saying that countries with existing trade deals with United States are exempt from that 100% pharma tariff, which they were talking about on branded products and branded drugs last week. Now, obviously, this will mean that EU has a tariff of 15%. So for products that are being sold from EU will be at 15%, or exported from EU to the US is going to be at 15%. Now, what the management last week when they spoke to us, they said that Zynic, which is an important drug for the company, is unlikely to get impacted because they were in the EU region. So that important drug for them will not see an impact coming in. And that is why this is, sentimentally positive for the company in terms of the impact impact that we could see also would be much lower, and that is why the stock is holding on to gains of almost 7-8% today, Mangalam.
All right, so those are a couple of these pharmaceutical names which are on our radar. But Vivek joins in. He has a lot to speak about on Vascon Engineering. Vivek, so we're talking about movers and shakers. Wockhardt up around 8%, a percent higher for Lupin as well. But Vascon, that is top of the pops, up 9%. What's causing this move?
Well, a very interesting update, that the company has put up over the weekend. Now, what exactly is the company saying? The company is saying they've signed a 5-year memorandum of understanding with the Adani Group, and this is Adani Infra. So, what will Vascon's role be in this particular MOU on this partnership? They will act as the execution partner under an early engagement model. So, Vascon says they will be involved in the projects, engaged in the projects from the design stage itself, and they say that 3 projects in Mumbai amounting to totaling close to 13.15 million square feet has already been identified. Now, the partnership, Vascon says, is expected to contribute an additional 30% to the company's turnover. What the details in terms of actual timelines, when the projects will start, what will be the margins that Vascon enjoys, at this point of time, it's not yet available. But clearly, given the fact that it improves revenue visibility significantly, remember, the end of Q1, Vascon's order book stood at just around 2,900 crores.
Okay, Vivek, thank you so much for that. But Mangalam, you're keeping an eye out on HUL as well, and this is post that Q2 update. What is it highlighting? And today, why is the stock a bit muted then?
Well, a couple of things, that stand out. We've been speaking to a lot of the consumer companies post the GST announcement that came here on HTR, and they said that there could be some near-term disruption on account of the GST cuts that have been announced. And remember, the GST cuts came into effect from September 22nd. So that implies that, the last 4 or 5 days of a working month where you do see a lot of inventory being pushed to the dealer channel, those sales were taken out. And that's exactly what HUL is saying as well. The second quarter will see nearly flat to low single-digit growth on a consolidated basis. And it was supposed to be a washout quarter. Everyone on the street was expecting that for a couple of reasons. One, that, a large part of the transition from GST would impact the trade channel, so there would be disruption on account of that. And in the earlier part of the quarter as well, there were a lot of unprecedented rains in a lot of the important markets. There was flooding, etc. So that could have impacted sales as well. So all those factors meant that the second quarter would be a washout, and that's exactly what the street was pricing in as well. That's why the stock opened lower, and thereafter we saw a bit of a recovery. But why is it still holding lower? Because the company has said that they anticipate recovery starting November. Now, most on the street thought that this transitory impact would come undone in the first week of October itself, and that will be a positive. But because signs of this disruption will percolate into October as well, it's a bit jarring. Why is that? Because October is where you have both Dussehra and Diwali. So a lot of the festive season sales that everyone is building their anticipation on will still be disrupted. So for someone like an HUL, if your most important month in the year is still disrupted and recovery is only seen in November, that's not particularly good news. That explains why the stock hasn't recovered as ferociously from the lows as the street was earlier anticipating, and sitting with a cut of about 0.5%, despite having seen a cut of almost 5% over the last 7-8 trading sessions itself. So that's about why HUL is lower. But for all the other FMCG companies, I do believe that, the recovery would be a lot faster than early November, as HUL has been pointing out, and festive season sales would be good for the entire sector by and large.
Absolutely, Mangalam. I think HUL, maybe Sal Mubarak will be a good year for
Perhaps,
them.
let's see that. But for them, the bigger trigger always is the leadership change coming in, beauty and wellness doing a lot better, and them generally getting their act together. So this is just a niggle in the long-term prospects of the company.
Absolutely. Thanks so much for that, Mangalam, explaining us about HUL as well as other FMCG companies. But let's go across to Vivek again, who is here to tell us which are these other stocks that are moving around in trade. What are we keeping an eye out on, Vivek?
Well, that's right. So especially in the last half hour or so, what we've actually seen is that the advance decline ratio has actually deteriorated a little bit. But despite that, a few stocks have actually managed to make a bit of a comeback, especially the pharma names. A lot of the pharma stocks, remember, they took a sharp knock on Friday. Most of them today have managed to bounce back a little bit. Wockhardt up almost 8%, Zydus Lab 1.5%. Cipla Lupin were higher, but have cooled off in the last half hour or so. The other stock in focus is Sammaan Capital. That particular stock is out of the F&O band. No particular trigger, but that stock high by almost 10% in the session today. The entire PSU oil and gas basket is doing quite well in the session today, and this across both upstream as well as downstream. MRPL high by almost 4.5%. Remember, all of the oil marketing companies actually met the minister over the weekend, and those stocks, also higher by almost 2.5–3% today. Have a look at Bharat Electronics as well, one other stock from the PSU space. A very large order build, quick range surface to air missile, almost 30,000 crore worth of order. Now there is a lot more visibility on that. That stock higher by almost 1.8%. On the other hand, quite a few laggards as well. Have a look at the entire EMS space. Most of these stocks, some worries in terms of tariffs is something that has come about. And the back of that, have a look at Dixon, Umber, Keynes. All of these stocks significantly lower in the session today among the top F&O laggards as well. The entire shipbuilding basket today, most of these names have cooled off. Vascon, Cochin, Garden Reach, all of these stocks anywhere in the range of 2.5 to 5% lower. M&M Fin, one of the top F&O laggards in the session today, almost 3% lower. Jindal Stainless, very high volumes of this particular name are typically much lower, down by almost 4.5%. And Axis Bank, private banks have cooled off a little bit from the day's highest point. Axis Bank down almost 2% today.
Okay, thank you so much for that, Vivek. But on that note, we're going to slip into a very short break. Don't go anywhere. We'll be back with more updates on the other side. Welcome back to Halftime Report on CNBC-TV18. As of now, Nifty 24,640 is what it's managing to hold on to. Flat with a negative bias is what the Nifty is trading at. In terms of the last 10-15 minutes, what we're looking at in terms of a fall, SCI pulled that up. That's down almost 1% in just the last 10-15 minutes. So that'll be interesting to watch out for. Other than that, we have Minda Corp. That's also seen a bit further more of a fall, around 1% of decline in the last 15 minutes. So that is something that we'll be keeping an eye out on. Other than that, obviously we're seeing that pharma, we're seeing Wockhardt Hospital that continues to manage to hold on to gains. Other than that, we have this JB Chemical Pharma that is also managing to hold on to gains, as well as Zydus Life and Sun Pharma. Sun Pharma is a big one, Mangalam, there, because Sun Pharma also, everyone was worried about the exposure that they may have to US and the concerns that come in there. But today that's managing to hold on to gains after the clarification that's come in.
Those are the big boys. I'm just looking at a couple of these cash stocks which are surging right now, and big volumes on that one. Shalimar Paints up 7%. Specialty Restaurants has crossed its 10-day average volume. Now the average volume on that stock was a certain number, and Specialty Restaurants is seen 10 times that traded average volume on that stock already. It's not Shanti Gears, it's Specialty Restaurants. That's the one that should come up for you on the screen right now, up around 11%. And the other one is V2 Retail, up 7%. We had the management join us on the channel today. They target 50% revenue growth. They expect, the Ind AS margins, pre-Ind AS margins to come in at around 8.5% with 8 to 10% same-store sales growth. So V2 Retail is the other stock that comes up for you. Seen a bit of a spike, up around 7%. Take a short break, come back, get you more on the markets and a lot of stock-specific action. Stay with us.
Welcome back to Halftime Report on CNBC-TV18. As of now, let's look at what the Nifty is doing, and Nifty is managing to just hold on to 24,600. Yeah, it's just around that mark. So not much of a worry that we're keeping an eye out on in terms of an up move or anything that we're seeing in terms of a move there for the Nifty 50. Let's look at the broader end of the market. If there's any sort of a recovery there, not much there, but still it's in the positive side right now. The Nifty mid cap 0.05%, so around that flat line. Let's see if that furthermore sees a recovery. That'll be interesting to watch out for. And like we started the show by saying those important triggers that Mangalam had highlighted, that will be the key for the rest of the week as well. In terms of the top gainers today in the broader end of the market, we have HUL Housing Finance. That's the one that managing to hold on to very strong gains. 8-9% of gains right now is HUL's Housing Finance. We have, those BPCL, MRPL, OMC's names. Keep an eye out on all of that as well. OMCs are the ones that we are keeping an eye out on today as well. OMCs buzzing in trade. But let's go across to Mangalam, who's at the F&O desk now to tell us what's happening this afternoon in the world of F&O. What should we be keeping an eye out on?
Well, a couple of things. If you look at the frontline indices, you have the Nifty, the mid-cap index, as well as the smaller cap index. All of them have come considerably off the highs. The Nifty is actually now, down about 150 points from the highs. The mid-cap index is still holding mildly in the green. The small cap index is the one which is fairly lower as well. And if you look at the day's high on the Nifty, very close to that 24,800 mark, 24,791 is what we've seen as the day's high on the Nifty. You do have, the other sectoral indices as well, which are on our radar. We have the Nifty Bank as well as the Nifty IT index. both of them are underperforming. The Nifty IT index, however, is managing to hold on after an 8% drubbing is what we saw earlier. And the auto index too, ahead of the festive season, is flattened out a little bit. Remember, the auto index has actually outperformed a bit. And here's where the Nifty high is. So that's an extremely crucial mark. Why do I say that? Because, the earlier part of the market, we saw a fair amount of oversold levels getting undone. So you had, the Nifty put-call ratio, which moved from 0.63 to around 0.87. We've seen the volatility increase as well. So the India VIX comes up for you. That's the other one, which is higher too. And at the same time, we have important triggers to track. We have the September series expiry tomorrow. We have the RBI monetary policy outcome that will come by. And then we have a bunch of other important events to track as well, which include the likes of any developments in the US, India, and global trade talks that will happen. But ahead of expiry, what are the options which are fairly active on the Nifty? Just look at, the 24,800 call and the 24,700 put. The banking index, the auto stocks, all of them are seeing some sell-off. So we'll watch out for those stocks. So 24,800 call has a premium of 27 rupees, telling you today's high will be an important level to watch out for. 24,700 put, however, is seen a fair amount of writing and a premium is 70 rupees. So 24,600 to 24,650, where the Nifty is right now, is an important support zone to track for the frontline index. On the way up beyond 24,800, we obviously have the 50-day moving average, which will come up as an important resistance. So the easy pickings have been done. Now the market's flattened out once again, very close to support zones. Let's see whether it makes an excursion towards that 24,800 mark once again or not. All of that will depend on the stocks that I just spoke about. There's Maruti, there's Axis Bank, all of them which are under pressure. The one stock I'm watching out for today is Sammaan Capital. Has been buzzing around right from the word go as it exited F&O ban. But with all the open interest jump, it looks like it will re-enter F&O ban in today's trading session one day ahead of expiry.
Okay, Mangalam, thank you so much for that. We'll keep an eye out on that name, specifically Sammaan Capital. But let's move on and shift focus now to the primary market action. Tata Capital's rupees 15,000 crore IPO opens on 6th of October. My colleague Rima caught up with the MD and CEO of the company, Rajiv Sabharwal, and began by asking his view on the growth outlook for the company going forward. Listen in to a slice of that conversation.
If you look at our past, we've been growing over the last 3 years at 28% on our books, and our profits have grown at a faster pace. There was an impact which happened because of the merger, but if you look at our growth rate in the future, we do believe that there is a potential for us to follow the similar path. Our book is pretty diversified. We are present in all segments of the business, and that helps us provide multiple engines for growth. And keeps the book fairly diversified and good on the risk side too.
Let me ask you on your yield and advances. At 12.6%, it's lower than peers. Bajaj Finance is at 16.7, Shriram 17.8. Why is your yield and advances the lowest in the sector or amongst the lowest?
I think you have to look at it from the context of mix of assets and the credit costs. Both of these things are extremely important. We have chosen a path of having a lower unsecured book, which we believe keeps the book more resilient in difficult times. And it also allows us, the mix of products allows us to have multiple engines of growth. We do believe that our credit cost, which is the lowest in the industry, allows us to still have healthy ROAs despite the yields being.
So what's the target NIM in mind? You're currently at 5.2%.
I think when we look at the past, we have seen a steady growth in NIM happening. We do expect for us the future to be similar to what's been there in the past, the trajectory to look similar.
But do you think you can get to where, say, a Bajaj Finance is or a Shriram is, which is at above 9%?
I think it is not about NIMs alone. It's a combination, as I mentioned to you, NIMs, the cost of doing business, the operating costs, as well as credit margins. So I would say when you look at all three, they finally lead you to return on assets and then return on equity. And we clearly will be competitive and at an attractive ROA and ROE in the future.
Okay. There's one criticism, if I may call it that, is the absence of a hero product. For instance, Bajaj Finance is great in consumer loans. Shriram Chola in the CV market used, where Muthoot Finance and gold. You know, this helped the companies grow very fast, get good yields, and still keep their NIMs in check. The asset quality in check. I mean, what is Tata Capital's strategy going to be?
So we follow a strategy of not having a single hero, but having multiple heroes. If you look at our housing finance business, it is large and has, the housing finance company has a book size of about 71,000 crores and also has the highest ROA and ROE in the industry. If you look at the past, the ROA has been over 2.5% and ROEs in the
housing finance market.
In the housing finance company, ROEs of about 18 to 19%. If you look at our clean energy business, that business has one of the best quality books in the whole industry. We have very low NPAs and the returns are very good, besides contributing towards a green energy environment. Similarly,
actually, if you could just break up the book for us. 2.33 lakh crore is the book. Break it up for us in the various segments.
So if you, on a broad basis, if you look at the overall book, 63% of our book is retail, and that would be almost equally split between the housing business and the rest of the retail business.
Which is?
Which includes products like loan against property, personal loans, business loan, two-wheeler loans, education loans, used car loans, new car loans, commercial vehicle loans. So we are present in the whole spectrum of the retail business. Besides housing and consumer business, which I mentioned to be about 63%, about 26% of our business is SME. So about 89% of our total business is retail and SME. Within SME also we have multiple products, whether it is channel finance, term loans, leasing, equipment finance. We are present across the spectrum. And the balance, about 11 to 12%, is the corporate business.
Let's talk about this merger with Tata Motors Finance Limited. It just got concluded in May this year. So when you took it on, what did it bring in terms of the size of the loan book and even in terms of the asset quality? Because what we understand is that the asset quality of TMFL was actually quite poor.
For us, before the merger, we were not present in the commercial vehicle space. And that's a pretty large market. It's a market with a size of 10 lakh crores plus, with a yearly disbursements of about 1.5 lakh crores plus. We do believe that this new segment will give us another engine for growth in the future.
What was the size of Tata Motors loan book?
This book, when we took over, was about 28 to 29,000 crores and formed about 11% of Tata Capital's total book.
Okay. And in terms of NPAs, what were the NPAs?
So their NPAs were slightly higher, in the region of about 5% or so. In terms of our approach, as I mentioned to you, we've always been very conservative and have had the NPAs as well as credit costs amongst the lowest in the industry. And that is what we will look to replicate even in the commercial vehicle business.
Do you think it's possible to bring the consolidated credit cost to sub 1%? And how long will this turnaround effort take for you?
So, as again, we've always been below 1. Our endeavor is clearly to remain in that region itself.
And how long will it take for you to get there, to your mind?
The shorter the better.
Of course.
And I think we should be looking at that happening over the next 12 to 24 months.
Just talking about the near term, in Q1, your loan growth was, I think, only about 17%. I mean, is there some sort of a slowdown? And what's been the extent of transmission of interest rates?
So if you look at Q1 and you break it up into two parts, the motor vehicle business and the erstwhile Tata Capital business. Tata Capital's business grew at about 23%.
What is your own loan growth guidance for FY26?
So as far as growth is concerned, we do believe that it's a function of what happens in the economy, but it should be within the 20 to 25% range.
All right. With that, what we'll do is, take note of this IPO. And obviously, between 6 to 8 October is when it opens for subscription. We'll talk a lot more about the company and the prospects going forward. That's about Tata Capital. Let's get in some market technicals now. Aditya Agarwala joins in. Aditya, the early part of the day, we were expecting a bounce to happen, especially given the oversold conditions in which the Nifty was. Right now, we are seeing some sell-off from those levels, from higher levels. Do you think this is tradable right now, or we're still in that no-trade zone where there is no direction right now, given the sort of, drubbing that we've already seen earlier and the fact that there is selling at the top? What do you do?
Good afternoon, Mangalam. Thanks for coming to the show. Clearly, it's a no-trade zone at the moment because we are directionless. To be honest, we are stuck in a range between 24 on the downside, 24 400, 24 500 on the upside, 25,000 is where we are facing stiff resistances, and above that 25 400. So we are stuck in a narrow band on an intermediate term and a slightly broader band on a larger time frame charts. But having said that, my sense is you will see a base getting formed somewhere around these levels of 24,600, 24,550 on the downside, and you could see a short covering rally from these levels. You just have to be a brave heart to take a trade here because you never know, the stop loss might get triggered and then market can show a short covering rally as well. So if you are a brave heart and you can take a trade in the market, then yes, these are times to go long on the market because risk to reward is clearly in favor. Markets are very close to a strong support zone of this 24,600, 24,550 on the downside. Keep that as a stop loss and look for a long trade here. And you can actually see levels of 24,800 to about 25,000 again on the Nifty. Talking of Bank Nifty, my sense is that too is approaching a key support area of 54,200 on the downside. And we have seen a decent bit of a rally from the PSU lot. My sense is now maybe a large cap names, and especially the larger names, need to chip in. We have seen some bit of a bounce back from Axis Bank previous week. This today it's down. But my sense is over a period of time, you should see large cap private sector banks also chip in from these levels. So overall, from clearly a risk to reward perspective, because markets are sitting so close to support, I would be looking to go long on both Nifty and Bank Nifty.
You would be looking to go long on the Nifty as well as the Bank Nifty. So you're that brave heart, Aditya. But which are those other stocks that you're keeping an eye out on in terms of trading strategies?
So I've got a couple of buy winis because I think banking stocks are at a support level. And RBL Bank actually has been a surprise on the upside. Stock has constantly been making higher highs, higher lows, and in trade today we've seen a breakout from a consolidation phase. So I'll go long on an RBL Bank for its strength in the stock for a target of 300 on the upside with a stop loss on the downside at 265. And all the OMCs are showing strong performance. IOC is something which is looking very strong on the chart. So I will go long on IOC as well for a target of 160 on the upside and a stop loss at 142 on the downside.
All right, Aditya, thank you so much for that. So those are a couple of stock ideas that he has. He spoke about the commodity space. So let's, take a short break. On the other side, Peter McGuire of Trading.com joins in with Manisha Gupta, and they talk commodities. Peter hopefully will also speak in about the cricket match, and we'll get all that going after this very, very short break.
Welcome back, and Peter McGuire, CEO Trading.com, now joins us to talk about the kind of run-up that we've seen in gold and silver both. Peter, go to gold first. Yet another day, another all-time high, 3,800 is taken, done now. And what are the next targets? Or is it now in an uncharted territory? It has been there for some time. But what are you making of these price moves?
Well, good afternoon, Manisha. I tell you what, it's breathtaking. And when you're seeing that, I'm just looking at the screen, December 2025 futures on COMEX running at 3848. I mean, that's incredibly blasting moves. It's up the best part of $40 today or more. And the overall momentum is incredibly strong. 4,000's got to be penciled in. And the way it's going, it could be there within the next week or two, if not sooner, because it's just got huge... it's absolutely parabolic. And it's the bullish trade, Manisha. It's just incredible.
It is. I get the point, Peter. You know, a lot of people also now seem to be saying that, yes, on charts, it is overbought because we started this year with 26.50. We are trading at 38.15 in spot right now, but it still is under-owned is what the feeling is, especially when it comes to retail from most part of the world, even institutions for that matter. Funds have started to buy into this. ETFs buying is quite strong as well. Is the market now FOMOing out, or do you think there is a strong, concrete moves that we could be looking at in sense of price supports?
I think, Manisha, I think there's still a large degree of the population that haven't engaged in gold. That's globally. So whilst we're here at these sort of points, the overall momentum is really starting to gain traction. Young people, I know that India's got, it's part of your culture, but very much across the West, they're still starting to wake up. I think they're saying, well, it's up 40 and 50% moves. It's a ballistic move. And it's really gaining so much. It's gaining airwaves on radio, on TV, in the press. Main Street is really starting to take large gulps of oxygen that, all about gold, and the overall storyline isn't changing.
Oh, it isn't. And all that glitters is definitely gold, but it's silver as well with nearly 63% of gains, $47 an ounce onto that one. Where do you see that going?
Manisha, that's the one that's the standout. I really think that, the little brother is caught up and it's catching up and it's overtaken from a price perspective as far as performance. It's been extraordinary, and as you just said, nearly up 63% since the April lows. Just quite mind-blowing in that 6-month window. So, it's 47 on COMEX now, 47.35 for December 2025 contract. $50 is very much, as soon as it breaks 50, I think we change our philosophy because it's running away and it's just so aggressive to the upside, Manisha. So I'm expecting that to be taken out probably in the next couple of weeks, certainly during the October period, because its overall momentum is just extraordinary. It's dynamic, it's explosive.
Oh, it is. So while silver is giving you best returns in 10 years, gold is the best that it has given since 1979. So those are the kind of history that we are making when it comes to gold and silver. Platinum not too far behind, Peter.
No, platinum's great. I mean, it's been a wonderful metal to trade, Manisha, but the shine, whilst it's got industrial demand and we're all conscious of it, and a lot of people certainly like it from an investment standpoint, and across, platinum shares and physical as well. You can't dispute that it's been extraordinary, but I think the focus is very much on those other, it's close cousins, gold and silver. So, keep an eye certainly on platinum, but the whole complex is just on fire.
Peter, when you see a run-up of that kind, shape, scope, would you say that some correction, even a healthy one, is not too far behind? So if you had to talk ranges from here, a certain support in some sense, a pullback that we might be looking at in gold and silver, where do you see that happening until?
Maybe a few dollars. I mean, for silver, Manisha, you could see it's not unusual. As you just said, it's since 1979. These are once in a lifetime storylines. And what we saw as far as 1979, that was a big run up from considering 72 when it was $35 an ounce. So, the overall momentum has been extraordinary, and this doesn't happen often. And you can see wipeouts. You can see $100 stripped out of it very, very quickly. It might, I'm not saying it won't happen. No doubt it will happen at some inflection point. And there will be a point in time that's what markets do. They get overbought and the hot air, evaporates. And silver could, certainly take a few dollars stripped out of that as well. But at the moment, I think it's very much bullish, but when we do see that pullback, that's probably a better time to start buying even more.
So when we're looking at those way more bullishness that you talk about in silver, would you say copper would go the same way? Because we have seen very, very strong strength come in for copper in the previous week. There are supply disruptions that we have been talking about, but with China saying that they would now start importing copper, that's given another leg to this commodity space. Are you looking at much more bullishness there too?
I think so. I mean, it's through that $10,000 a metric tonne on the LME. It's got the potential to probably run hard to say 10.5. From a percentage standpoint, I wouldn't be surprised maybe 3 or 4% up over the next couple of weeks. And the support is going to be from, the industrial metal side, Manisha. But It's nothing like we're seeing in the precious space, but I think it'll drag the other ones up as well. Keep an eye on aluminium and certainly zinc.
We don't know what you guys, did talk about to the street right now when it came to gold, largely because he was talking about smashing and exciting and all of that and stuff. Seems like people have suddenly taken their money out of equities and pouring into gold right now, because just as this conversation was happening, just take a look at the intraday chart of the Nifty. Manisha, we started the segment at 24,650 on the Nifty, and now we're 24,600. Why? Because perhaps gold is where people are deploying their money in. But at the low point of trade, we have the Nifty Bank, which is down 150 points. I don't know what you did there, Peter, but, good on those who are investing in gold right now. But taking away from the equity market, seems like we have the mid-cap index, which was marginally in the green, that has moved into the red as well. And the India VIX has seen a spike of almost 10% from the lows. So there has been a decline from the highs, and we're currently at the low point of trade for the frontline indices. Thanks a lot, Manisha and Peter, for joining in. But amidst all of this volatility, one of the stocks which is doing well today is Dollar Industries. The management has gone ahead, or rather the promoters have gone ahead and told the exchanges about their intent to merge some of their group companies to become a vertically integrated entity. What does that mean for the listed company, and what do shareholders look at? Vinny, tell us more.
Hi, yes, so absolutely, we're keeping an eye out on Dollar Industries today because of these reasons. 9 promoter group companies, now they'll come under Dollar Industries itself. This will include some of the companies, right, this real estate side, commercial real estate leasing, some of the companies were doing, the yarn side of the business, the branded arms where they were even manufacturing garments like leggings and kurtis. All of that now will come under Dollar Industries. Now, for this, there's going to be a share swap and issue of shares of around 29.8 lakh shares will be issued to the promoters of Dollar Industries for this deal that is going to be taking place. This is all going to be through this share swap because related party transactions. Promoter stake will increase to 73.6% now, and this is all done at an arm's length price. That's a clarification, or the company has highlighted in the press release. What are the synergies? One, vertical integration that will boost the manufacturing process, right? Supply chains, everything that used to come in terms of, from products from here, all the subsidiaries to Dollar Industries will now all be within one company as well. So not much of a worry there. Supply chain efficiency comes in, reduction in terms of related party transactions, you'll see lower logistical costs, as well as faster project execution that comes in for the company in terms of pipeline. That is also something that improves for the company. Now, Arihant Capital has highlighted that, this level of merger could actually generate an annual saving for the company of 2 to 2.5 crores. So that is interesting to watch out for, but surely a positive way that we are looking at in terms of ease of doing business. The Dollar Industries has come off the day's highest point as of now, but holding on to gains of almost 1% in today's trading session.
All right, so that's about Dollar Industries. Meanwhile, we have a couple of these real estate players which are doing well. Sunteck Realty obviously entering the luxury market, so that holds well. But right now, Oberoi Realty too has moved higher, so that's another stock that's doing well. And we have a bunch of pharmaceutical stocks as well, which are spiking right now. But we have Strides Pharma, which has moved higher from the lows. Fortis Healthcare is at the high point. And we're seeing some traction in names like Petronet, LNG as well. All the oil marketing companies have been doing well all through today's trading session. Now, what else is moving? We do have, more of the same. Specialty restaurants, we spoke about that. Yes.
For some reason, Godfrey Phillips, Devyani International, despite the market seeing a downtick, those two have come up in the last 40 minutes.
So, yes, we saw that some traction. Maybe QSRs would probably be only because of the festive season and the holidays, because specialty restaurants, like I pointed out, was up 11%, now is up 13%, so extending its gains. And then we did see some traction in a lot of these quick service restaurants in the previous week as well. The market was a little wobbly. So let's see how that goes. We'll probably take a short break right now, come back, focus on a lot of other stock-specific action. And a lot of these sectors that are moving around as well. Fed-Fina, for instance, that stock too has moved higher as we speak. Take that break, come back, focus more on all things equities. Welcome back. We were talking about, the markets seeing a bit of a wibbly-wobbly move from 24,600 level. There has been a wee bit of a recovery. So the losses have been curtailed from, 50 points to about 30 points. Nothing really to write home about. Titan's doing well, so ahead of festive season maybe. And obviously, Manisha and Peter talking about gold doing a lot better. Gold is now the main street news. So that stock's moved higher. And we've also seen some traction in the last few minutes on a couple of these, financial names. So FedFina, for instance, before going to that short break, we saw that stock move higher to the high point of today's trading session. But let's talk about the pharmaceutical space. A couple of these stocks were buzzing around in focus. Winnie, what's the latest?
Hi, yes, so we're keeping an eye out on overall the pharma pack. One, in terms of the clarification, obviously, that came in over the weekend, right? Do not forget where we had the White House say that the countries with existing trade deals with the US are exempt from pharma tariffs. We spoke when we were talking about Wockhardt as well, right? So Wockhardt, Sun Pharma, they're seeing a bit of an up move because of this clarification that's come in. Because now Wockhardt, when they spoke to us last time, like I mentioned, they had said that 15% tariff is between EU and US, right? So then most of their Xenic product, which is the drug, that is sold from EU. So that concern goes away. Even if there's a 100% tariff that comes in on branded and patented products and drugs, that's not much of a worry for the company. Sun Pharma's specialty branded portfolio makes up around 19% of the total sales. So yes, if the deals with other countries still stays as it is, then it's not a worry for Sun Pharma as well. Other than that, obviously, we had a note that came in from Morgan Stanley on this as well. They said that, EU-made drugs which are exported to the US will continue to attract that 15% tariff, and obviously positive for Sun Pharma because of this EU tariff clarification. Most favored nations, they're going to be meeting the status in terms of update on tariffs will be coming in this week. So that is important to watch out for. And China has also given a commentary over the weekend that they said that they would reduce 30% of the import duty on Indian farmers, and an incremental positive that comes in on a sentiment front, given that actually China has most of its generic drugs, or the domestic market is very strong, so they can suffice themselves. But a little bit of that positive sentiment does come in for the Indian companies, and positive for Dr. Reddy's is what Morgan Stanley is highlighting, given that its EM and China foothold is much more than other companies that you would compare to in India. So that is why we'll keep an eye out on these pharma packs as well. As of now, Nifty Pharma has also come off the day's highest point. A very, very flat line is what we're watching out for right now for the Nifty Pharma. Other than that, obviously, just keep an eye out on Biocon. I just want to highlight that because they proposed for an early redemption of NCDs worth around 1,070 crores in a board meeting that will be happening on 1st of October. So it will be important to watch out for Biocon going forward as well. As of now, 0.6% of gain for Biocon as well.
All right. Meanwhile, just watch out for Nazara Tech. That's another stock which is on our radar. Has seen a bit of a knockdown, down about 5%. Obviously, this morning they did speak about, the bonus allotment of the shares post the issue. So maybe some bit of supply coming in, or just incremental selling is what we're seeing on Nazara Tech. But another stock which is on our radar is BEL, a near 100,000 crore worth order book opportunity on account of a 30,000 crore QRSAM tender. Apart from the full form of QRSAM, there'll be a lot more what it means for the business of the company, for which Ria will join us and explain the whole details. Ria, let's start with the full form of QRSAM.
Well, yes, Mangalam, it is a quick reaction surface-to-air missile, and as you said, the Indian Army has issued this tender worth about rupees 30,000 crores to BEL for this QRSAM order. Now, the Indian Army is going to procure around 5 to 6 regiments of this indigenously developed Anant Shastra surface-to-air missile weapon systems, as they're calling them now. And remember, back in May, shortly post Operation Sindoor, the DAC had cleared the procurement proposals for this project. Now, BEL will be the lead integrator for the project, and they are expecting execution to commence primarily from FY27 onwards. This order now enhances BEL's order book to more than rupees 1 lakh crores, and the current order book position at the end of Q1 of FY26 was about rupees 75,000 crores. The total order inflow in FY26 so far, X of this order that we're talking about, is around rupees 11,500 crores, and this meets around 42% of the company's FY26 OI guidance of around 27,000 crores. Now, the company has also maintained its EBITDA margin guidance at 27%, 27% for this fiscal, and the revenue growth in the medium term is expected to be over 16%. Now let's also look at some other companies that will contribute to this QRSAM project. Bharat Dynamics will manufacture the missiles for this project. The expected order value is between 10,500 to 12,000 crores for them. Apollo Micro is expected to onboard the computer and complete navigation system for QRSAM as well as contribute to the power distribution units for the project, and they are also going to be contributing to one of the critical actuation systems for this project. The expected order value for Apollo Micro will be between 800 to 1,000 crores, and this is important because the current order book of the company is just about rupees 735 crores, so this will be a big order for them. For Astra Micro as well, they will be contributing to subsystems like TR modules as well as subsystems for missile programs. The order value for them will be between 1,800 to 2,000 crores, and the current order book for Astra Micro is rupees 1,891 crores. For Axis Skates as well, this is also expected to contribute to the project, although the exact nature of contribution is not known, but the order value is estimated to be between 100 to 200 crores, and even two companies like Data Patterns and Paras Defense are also expected to contribute to this project.
Okay, Ria, thank you so much for that. We'll keep an eye out on all these defense names. And Mangalam, one thing that is not doing well today is also the shipping stocks and the shipbuilding stocks. You know, Cochin Shipyard, Guard, Reach Shipbuilders. All of them are under pressure in today's trading session. So that is what we'll be keeping an eye out on. But with that, we're going to wind down this edition of Halftime Report, leaving the Nifty at 24,638, 640 levels. So keep an eye out on that. It's a goodbye from Mangalam, me, as well as the team who put this show together. Thank you so much for tuning in.